Good morning, everyone, and welcome to the European crossover webinar. And we've seen quite, quite the run in equity indexes. You can see here with the SPOOs, we've actually made this run up here to this 3011. There's actually a key area coming in here, which is 3026, and that's going to confluence with 3020, which is 161% of this move right here. From 2903 to 2976, right here, actually goes to 29 up to 76, and then from there down here to 03 and 161%. We actually had the 127% at 29.95, and the market, you can see here, it kind of reacted, but just barely a bit. So potentially that could be a target what they can go to. We actually made a run up here into this 11 right here, and then we jumped up real fast to 14. Taking a short up here at 9, but we didn't react the way I was expecting. I thought we would have come down a lot quicker, and the thought that we actually, I think we dipped down to 8 or 7 3/4, and then we turned around and jumped all the way back up to 11. I think it was 1175. We should, at least in my eyes, we should not have jumped that far back up, because I thought, considering that we've been on a straight run up here with nary even a pullback, suggested a quicker pullback to down here. And the only reason we're even down here is because the other indices have actually kept on falling back. Not so much the Dow futures, but the Nas and even the Russell. From a percentage point, the Russell, if you were comparing the Russell to this, you'd say the Russell would have already fallen about, which obviously is a little bit more volatile maybe, would have already fallen about 25 handles in comparison. And look what, I mean, max, we're what, 10 handles away. So you can see it's been, when it has dipped, it's dipped kicking and screaming. And even the other ones were pulling back, and as soon as you'd see the Russell or the Nas start to move up a little bit, we jump right back up easily. And to me, like I said, I was just scalping it, because I think if I thought that that was the ultimate, then I would have been happy to hang on. But, and that 3011 is key. It's a key area here. When you look much further back, you can see a pretty good dogfight in this area. You see here, right there. Certainly a challenge area here, but the next key level here is this 3026, and that would confluence with this 3020. And once again, like I said, when I look at it, you can see here that 3020 makes a lot of sense, because we had that, let's back. We had this whole range in here. See right there? So that made all the sense right there for it to go right to this level here. I might pull it down here, but there we go. 3020. So it gives them a target to go for. And that 3011 is a nice pause, but I thought we should have reacted. This should have easily, once we got here, should have easily, and that would have taken out any stops here, should have easily have come down rather quickly. Basically what we saw in the Russell, and even to a certain extent the Nas, should have jumped right down here. So I'll be honest with you, I was almost going to scratch it, because it hung around so long, and even when it was hanging around, it was still jumping up to 3010.5. I'm like, this isn't good. So once again, we're hanging on so long. The reason I'm going into those details is because the fact that it hasn't even pulled back much really opens the door, so that when we hit the US Open, there's probably a pretty good chance that we can get to this 3020 potentially. And I even looked in here thinking, okay, could I have made any errors? I mean, yeah, I was scalping, but you know, there wasn't anything in the 2 minute. Yeah, we had gone into a short-term sell signal here, but there wasn't anything that I would say definitively like, wow, that was a huge jump up, and look how it fell back. And I looked to the 5 minute, same thing here, like, wow, look at this. This completely was a dark cloud cover. Nothing here to suggest, man, this thing is really going to come apart. But like I said, you know, considering how far we had come, with, like I said, look at this, nary even a pullback. Probably got a little bit of a pullback from here, I have to say, but this would have taken out these stops here, and then we should have seen a very fast pullback. You see that? And this is a 5 minute. It's not like it's a 1 minute. And look how we just kept fighting back in here, fighting. This thing could have easily just ripped up to the 3020. So I wasn't willing to stick along, because, you know, for what I was looking for and in the time frame, it didn't match. My target was actually 3,450, and ultimately, yes, we did get there. But this dogfight right in here, trying to give you some perspective. That should have never happened. That shouldn't have happened, because when you come up here and you take out the stops here, that would have taken anybody out of the positions, and then usually you'll see the market. Then, once it's come there, then we can react, which I expected down here. And maybe we come up to this bar, maybe put a little bit of a dogfight, maybe, like I said, maybe from that bar. You see what I'm saying? Like maybe there's a little bit of a dogfight, okay? And then we come here, but not all the way. And it jumped all the way up to almost to 12. So that, like I said, I knew, to be honest with you, I was like, I'm probably going to have to be stuck with this thing. And like I said, so many times I was like, okay, now it's going to break, and it just wouldn't. You'd see here we dipped down to 8, and okay, now it's going to break, come right back up. Okay, now it's going to break, come back up, then come back all the way up to 1175. So that's what I'm saying. Time-wise, it did not match up to what my expectations were, and why I was so quick to, then just say get out of it. And if you look here, we hadn't even made it to VWAP, and the Russell was even below VWAP. You see what I'm saying? So, like I said, this thing just, and leaving now, right now, maybe I should be, like I said, I'm thinking if I'm wrong, I should be kicking myself and saying, oh my God, look at it. It's already at 29.96. Oh, I should have hung on. Look, it's holding up like a rock. And so we've rallied so far from Friday that I'm thinking that when the cash opens, we can actually make that push up here, maybe get up to that 3,020. And as I mentioned, 3,026 is a level here. You can see we're above the 200-day moving average, but 3,026 is a level up in here. So I just want to go and touch on that. Nasdaq, already a pretty good run up here in the Nasdaq. I think on a daily, I need to get rid of these things here. I think it's on the daily. You can see here is 96.25. So you can see it looks like they're almost there, but they're not quite there yet. So once again, maybe we see this in the daily session here to make this run up here. I'll get rid of these. But I think we can make that run up here to 96.25 up in here. And the NAS, and we can take a quick look over here at the Russell before we get into the analysis. The Russell, we got 1422 for the 61% of this entire move here. Really nothing here. We got this big old downdraft here, but you can see 1422. I think there's nothing really here on the 2 hour. I could be wrong here. Let's see. Oh, 1413. Yeah, there is 1413. So I do want to mark that off. You can see here there was that low here, right here, and then the market opens up above here. We actually bounced off that low. So this is a significant area, this 1413. So it's not like we're that far away. That's what I'm saying. If we make that jump here in the cash equity open, like that 1413 is going to be key right there, and the Russell. And look at the YM here, the Dow. Same thing here. Look how we're very close to this 25,062. We haven't quite made it. You can see here, this was the open here at 25,062, and you can see, look how the market reacted down here to 25,062. It closed up to here, rallied, and then the next day, look how we gap lower, and when it gap low in the open, it just kept on going. So that 25,062, we haven't quite met it yet. So that's another, like I said, key area right there. You can see that. So that's what I'm saying is, looking at those things, and I was thinking, okay, now we're going to go on and break. Right now, SPOOs are at 3,007. We should have gone and broken early. And that's what I'm saying. I came close to just scratching out of the trade. I mean, I made a couple of bucks, but I was not happy with that situation on. I'm thinking, hey, this thing should have already fallen down, and I'm trying to be patient with it, so I don't have any regrets on that because it just didn't meet my timeline. Um, Actually, probably should have just scratched it, just left it alone at that. But like I said, hung on, so came out okay. But like I said, my whole point going back to that, you can see here where we are, crude, still pretty steady with crude. Going to move this back here. So my whole take on this, and you can see here we are, 3,750. We haven't even fallen much, and like I said, if you compared the move to the Russell from a percentage point, then the Russell would have fallen basically about 25 handles. And we go, top to bottom, we've fallen what, 10 handles? You see, I'm saying, not even anywhere close. But like I said, with this, the way this move has gone, I think that without nary a pullback, look at this. This has just been phenomenal. Look at this run. Then I'm thinking they're shooting for targets, and 3,011 and 3,020. I mean, this is a good pause. I thought at least from 3,011, I thought we should at least move down to 3,000 at least. He said we've only been like maybe 3 3/4 or whatever, but I think they've got their eyes set for this 3,026, and 3,020 is 161%. So, and you can see here, there's barely even a pullback here. So they may just stay steady until we get to the cash equity open and try and make a stab here. Maybe even pop above this 3,026. And then maybe we can take a pause. But look, this has just been a phenomenal run. And they may be waiting until the cash equity open, because can you imagine how, because we look at all those in the futures and they've been blown out of the water. But there's probably obviously people in the cash, and they're going to wait for them to get out of their positions. You see what I'm saying? Anybody that might be short or whatever, or stuck, or whatever the case may be. So I'm thinking that's when I was in that situation. I'm like, wait a minute, this thing is holding up too well. We may just hold on and then hit the cash equity open in the morning. So like I said, that, and I don't regret it in that sense, because it certainly did not meet my timeline. We should have already just quickly jumped down there to about 4. Even to see down here, right there, you see, we should have, and I was even being conservative here. I said, okay, right there, 4.5. So I thought we should have quickly come down in here, as we saw with the Russell, and then jump right back up. Hey, let me take another short against it. Same thing here. No, we just fought like I mentioned in the chat room, fought like a dog with his hanging onto a bone. This thing just did not want to give it up at all. But anyway, enough on that. We'll go and take a look at a real quick jab at FX, and then we'll do the news, and then we'll do the analysis. Because yesterday was a holiday weekend, so bear with me. Let's jump over there. Oh, yeah, let me just go and pull out the calendar. So German consumer sentiment, they're looking for minus 18.3, minus 18.9, pretty much in line. Let's see. Some Mexican data at 7 a.m. Eastern. Of course, I'm in Central. We do have building permits and monthly home price index here, as well as Case-Shiller at 9 a.m. Eastern, and consumer confidence at 10 a.m. Eastern, along with new home sales. Let's move into FX. Seeing euro with a little bit of a bid here at this 940. Canadian dollar continuing to weaken. And cable has made a little bit of a run up in here. Pesos continue to still dip lower. And we'll look at the analysis. The analysis was actually over the weekend. Obviously, yesterday was U.S. holiday and also a UK bank holiday. So there really wasn't anything going on. So I did an update from there. So we're going to move into that. Before we do that, we'll go in and take a look at the news. Doggone it, where's the news? Oh, here. So Australian and New Zealand dollars push higher, bonds catch a bid. The Australian and New Zealand dollars pushed higher on Tuesday as more countries pressed ahead with restarting their economies, while bonds benefited from the signs the Australian government will not have to borrow as much to fund its stimulus plans. The Aussie added to 65.72, having bounced from solid support at 64.95. The Kiwi climbed almost to 61.31. Domestic data held some hopeful signs for consumption in Australia, with one survey measure of consumer sentiment up for the eighth straight week, and banks reporting rising spending on their debit and credit cards. Very large losses in the travel-related and dining takeaway spending across Australia have been offset by strong growth in services and grocery spending. Non-essential retail growth is converging with elevated grocery spending as fashion sales almost fully recover. Home-related spending remains strong. In the bond market, sentiment remains supported by the Australian government's announcement late last week that the cost of its job retention programs is likely to be 60 billion Aussie dollars. We estimate that almost all the reservation will be saved and hence see bond issuance around 60 billion lower than previously expected, wrote analysts at Westpac. This is a considerable amount, more than 10% of the current balance outstanding, and should see a significant recalibration of borrowing expectations going forward. And look at the SPOOs right now. They've already hit 8.5. So like I said, they're keeping their bid here. Let's go into the dollar. Dollar dips as pandemic recovery hopes buoy risk assets. The dollar inched lower on Tuesday as growing optimism about a global recovery from COVID-19 pandemic supported riskier currencies, but moves lacked the exuberance of the equities markets as Sino-US tensions kept the mood in check. Trade-sensitive Australian and New Zealand dollars each rose about 0.5%, but remained below last week's highs. Markets are caught between two conflicting currents, said Michael McCarthy. Rising tensions between China and the U.S. are raising concerns, while easing COVID-19 lockdown measures are fueling growth optimism. Against a basket of currencies, the dollar was marginally softer at 99.61. It inched higher on the Japanese yen at 780, but was a tad weaker elsewhere. Trade, the handling of the pandemic, and China's move to impose laws on Hong Kong are all seen as potential catalysts for further deterioration in already testy U.S.-China relations. The latest salvos came over the weekend with White House Security Advisor Robert O'Brien warning of potential sanctions if Hong Kong's autonomy was undermined, and China's top diplomat Wang Yi criticizing U.S. attacks as a smear. With elections looming, U.S. politicians are compelled to ratchet up the tensions in the coming months. Ruinous Cold War that hurts global trade, supply chains, efficiency of common standards, and geopolitical stability is increasingly on the cards in our view. Meanwhile, the economic fallout from the pandemic and the global recovery policy response keeps growing, and investors are becoming increasingly nervous that a pullback may be due. China's central bank governor Yi Yang flagged further easing in an interview. Third grade downgrade in Singapore also provided a fresh reminder of the pandemic's devastating impact. Let's see, anything else? Still from Japan, restrictions on businesses and relative calm. Braver traders looking for carry, and the beaten down Mexican peso and Brazilian real each added 4% and 5%. Let me see if there's anything on the hang on. There's a story in the UK, but I was trying to see if there was going to be a the morning bid. Oh, it's here. Okay. This is always key and gives us a good flavor, especially now that we're at the beginning of the week. So let's take a look what it has to say. Boy, it's really short too. End of lockdown euphoria boosts equity markets. Optimism about lockdown relaxation is buoying equity markets, with investors ready to look past tensions between Beijing and Washington over China's plans to impose national security legislation in Hong Kong. A raft of measures are brightening the mood. Japan ending the state of emergency, Greece opening its islands to domestic tourists, Spaniards heading to the bars, while Britons will soon be able to borrow or be able to browse car showrooms, and outdoor markets again. Stocks have risen with Japan's Nikkei climbing to a 10-week peak, while Wall Street futures indicate a near 2% jump. Prospects up for more stimulus from China added to the chipper atmosphere, with oil prices climbing more than 2%. Safe havens are feeling the pinch, with German yields rising to 1-week highs and the dollar slipping. State aid and some positive data also provide support, with Berlin throwing Lufthansa a €9 billion lifeline on Monday, with France will detail support for its auto industry. France National Investment Bank, BPI France, raised nearly 4.2 billion euros. Nothing really here of any significance. So we'll just touch real quickly on, there was something about the sterling. The pound rose against a weaker dollar overnight and continued to gain in early London trading after Prime Minister Boris Johnson set out plans to reopen thousands of high street shops, department stores, and shopping centers next month. Look at the doggone SPOO's already up to 309.5. That's what I'm saying, is that I don't regret that one at all. Opening up pubs, restaurants, and bars after coronavirus lockdown is difficult. However, they'll be standing up at the bar and pubs for a long time. Sterling is enjoying a brief reprieve after a tough couple of weeks, potentially buoyed by the news that UK retail sector will open up in mid-June. However, Euro Pound will struggle to break below 89. Let me see, nothing any real significance. So I guess we'll just hurry move into the analysis. Okay, so Haldane is going to be speaking at the top of the hour. I know that Amanda mentioned that, so Haldane will be talking at the top of the hour. One moment. Let me just notate in the chat room for anybody missed it. And they said they were going to post a link. So let me, bear with me. Hold on, I don't know why the hell it's taking so long to load up. Oh, it's even doing a GoToWebinar. What the heck? I didn't want all that information. Yeah, it's posting like a GoToWebinar. That's pretty weird. But they were going to, it says watch live Bank of Haldane discussed impact of COVID-19 on CBI webinar. So they're actually doing a GoToWebinar on this thing. It's kind of nutty. But anyway, and I don't even have GoToWebinar loaded up on this machine, which I don't want to because it chews up so much memory. But anyway, let's go and move into the analysis. This is actually from this weekend, but of course, like I said, Monday was a holiday. So it says, Euro had another unsuccessful attempt at breaking 110, going to Friday, May, find stuck bull support will be 913 with resistance at 990. Well, I'll stick with the resistance at 990. Like I said, I didn't do it because there was basically almost not hardly any trading yesterday. So 990 is going to stay. Support is going to be this 893. So at 892, okay, good enough. Let's go and move into the cable. Okay, you can see here we're making a run up here for this 2285. That's going to be resistance right here, 2285. Actually, it's going to be, let's just move it just right. You see this little open here? Right there and close. That's going to be 2291. So 2291 is going to be resistance. Support, it's going to be this low right here. See that? That comes in right there. 2189. Boy, look at this Aussie. Holy smokes. It's still pushing higher. I would go with this, okay? But here's my take. Because I do expect cash equities to push higher, obviously to meet where the futures are, may allow us to go and make this further push and take out those highs. So going with a level, it's going to be right there. 66.24. Support in the meanwhile will be all right there. You see here that ridge right there, and it confluences with this low here. It's going to be 65, 68. Let's go move into the QE. Well, just like the Aussie, the Kiwi is also making the stab here, and it's going to go above these highs. I mean, we're actually breaking above these highs now. So how much further can it go and stretch? I don't think they would make it up to 62.05, but I like this low right here. You see the low bar there? That's 61.89, basically 61.90. So let's just go with, which is pretty close to the 62.05, but I'm going to go with that 61.90. We'd have to say it's really bullish, not bearish. Support. Let's go with the 2-hour. Same thing here where we did it with the Aussie. The only thing is we'll go just right there, which is 61.20. 61.20. Since Scotland's Ross quit on behalf of the Dominic Cummings issue, so I know all how significant that is. But anyway, let's go and move in now to the CAD. I did have the from the weekend, which you're not really seeing very much move here. Dollar CAD remains indecisive in the 39 to 40 range. Initial resistance is 40.48, with a daily close of 41.03, allowing for a challenge of 42 even. Support is 39.23, followed by 38.82. So we're pressing here. So we'll go with the 38.82 because, like I said, that was for the weekend coming into Monday. So we'll go with the 38.82. And on the upside, it's going to be this close right there. That'll be the close. 40.03. I'm moving on to the dollar peso. This thing's still falling. The dollar peso kept the week long slide in place into Friday, closing below support at 22.85. Next key support for a period of challenge is 21.88. So with the initial support 22.12. Here's the 22. So I like the 22.12 down here. So that's what we're looking for, 22.12. And we'll look at the 2 hour. Let's see if it's bad shape. We're not too far from that 22.12. Look at that. But I like that area down 22.12. A bounce back would have resistance right there at 22.51. It's called 22.52. And let's see if we've broken far enough to say it's bearish. Because don't forget, I mean, this thing has really gone to the moon. Even though it's short term, we have to say, yeah, that's bearish, because look how we've broken, and we've had 2 consecutive days below that, so we can go with bearish now. Even though from a longer term perspective, it still would be bullish, but we can now switch this to bearish. Let's go move into the Dalian. So the Dalian finished the week at bid in a narrow range just below 778. Resistance will be 830 with support at 702. This is amazing considering how far equity's come. It just doesn't want to go any higher. But if we do hit some stops, it'll be 830. We'll give it a little bit of room. Probably more room than it needs to have, but we'll go with 830. At least if you're looking at the short side, but like I think Blake said in the week ahead video, it's dead money. And then on the downside be 702. But if you were taking short, at least you know where your risk would be. You know what? We'll just leave it at that 714. We had 714. We'll just leave it there. Let's go and move into the dollar index. Dollar index finished the week in a recovery mode, closed at 999, 982. Resistance will be powered 35. Obviously, like I said, with the dollar now, that was going into Monday, but you can see we're under some pressure today. So it's going to be this close. It's going to be resistance. Actually, we had a little bit of a spinning top there. So there's resistance right there, 99.80. And support's actually going to come down here, 99.16. We're just going to just go with the level, which is going to be 99.10. And let's go and move into the cross rates. Boy, this thing has continued to move higher, but we're not stretching is what you would have thought of considering the risk on. Um, See, the Kiwi yen saw a second-day pullback on Friday following a three-day ascent. The pair should find solid support at 65.05 with resistance at 66.20. And that looks like that's where we ran out of gas. Well, we ran out of gas at 66.22. So we had 66.20. So that held up. So we'll keep it there. 66.20. Support, you can see the touches coming from here across the board. 64.98. Euro yen. Euro yen paired back 150 pips from the high set on Thursday, testing 1704. The pair may come in a little more to test 1676. Resistance will be 1774, but you can see here we blew out right in here, which is pretty interesting that the euro jumped up like that against the yen, but the euro's already on the bid. Resistance then would be, you see these touches here? That's 1852. That would come, you can see where they're coming up. You see right these closes, got all this volume coming across here. You see that? So that's 1852. Support on the downside is going to be right here. You see this one right here? Use that for support. That would be 1753. And let's go to Euro Aussie. Thing just keeps sucking land. Euro odd posted a gravestone jojo on Friday as this pair simply cannot sustain an upside move. Support will be 65.59 with resistance at 67.56. And didn't even make it quite up there today. It looks like we made it to 67. Oh, okay, got it. It did fall even further. Holy smokes. Support will be 65.59. We've almost come down there. 65.68, so 65.59. This thing just can't get a break. High's just going to be today's highs. That's it. I mean, what's actually confluences here, you see these touches here? All confluences will be 66.73. They're not coming up there anytime soon. And go to Euro Kiwi. Euro Kiwi is stuck in the mud with no sense of direction. Resistance at 79.96 was supported 77.80. Look, we're even below that. We'll just go with this level. We're actually going to go with this low here. The level is 77.50, but the low on this bar is right there. 77.27. It's annoying. And resistance is going to be this bar here, the low here, which is going to be 78.32. Okay, let's go into the Aussie yen. The Aussie yen saw a moderate pullback to end the week after a 3-day ascent. Solid support will come at 66.34 with resistance will be 71.06, with it even pressed even beyond that. But I was going to say, stay with the 71.06, but don't forget, we got that cash equity open, which will probably keep it up, still on the solid bid. So just go with the high right here. Not the high, but the close here. So that's going to be 71.28, just above today's high, which does make sense. It's 71.28. And let's look at this. Yeah, we should be flipping this to bullish now. It doesn't mean that's the top. I'm just saying this. That's, it's not bullish, but you can't really say it's bearish yet. I mean, really, if you get 2 consecutive closes above here, it's definitely bullish. We were able to defend 68.69. So yeah, it's in the short term, it's still bullish, or medium term, I should say. Support is going to be right here at this low, right there. See that? That's going to be support, which is 69.92. Now let's go move on to the guppy. And this has just been dead money. I mean, this market. I'm just going to go with this resistance right here, the level, which is 32.55. And support, well, you can see they're picking themselves up from this low here. I'm not going to go all the way to that low, but you would take the high there. So you can see here the confluences right there, all these body touches. Probably could go a little bit higher, not much. Tell you what, you can go the high of this bar right there. That'd be support. It's going to be 31.40. And lastly, starting on. Another stuck in the mud thing here. Starting out plus a gravestone dojo on Friday, the pair needs 2 consecutive closes above the key level, 86.56, to establish a short-term bottom. Support will be 85.38. So we'll go with that, 85.38. And resistance, it needs 2 consecutive closes. That'd be right there, 86.56. And that wraps up the analysis here for FX. We see the Kiwi still popping up in here. And the euro on its bid still at 9.48. All right. Well, thanks for joining us here in the European crossover webinar, and we'll see you in the chat room.